Today, I want to talk to you about a topic that's especially important for roofing businesses: co-mingled services or mixed services, where both taxable and non-taxable services are billed together as a single lump sum charge. The big question is this lump sum charge 100% taxable? The answer might surprise you. It's not always. Let's consider an example that's common for roofers. You might have a contract that covers both taxable materials and non-taxable labor. For instance, if you're providing roofing materials along with installation services and you bill your customer a single lump sum for both, it might seem like the entire amount would be taxable. But under Texas tax law, that's not necessarily true. According to the Texas Administrative Code, the entire charge isn't automatically taxable, as long as you can properly separate the taxable and non-taxable components. Here's the crucial part. If you can document the split between taxable materials, like roofing shingles or other supplies, and non-taxable services, such as installation or repair labor, you don't have to pay sales tax on the entire lump sum. You only pay tax on the materials portion of the charge. Now, if you don't separate the charges, Texas has a presumption rule. If more than 5% of the total charge is for taxable services, then the state presumes the entire amount is taxable. However, you can overcome this presumption if you have records that show how much of the charge was for non-taxable services. Let me give you an example. Suppose you perform a $30,000 roofing job and don't break down the costs of labor and materials in your billing. If you later get audited and you can't show how much of that $30,000 was for materials versus labor, the entire amount could be deemed taxable. This is where proper documentation becomes critical. Having detailed records, such as invoices that clearly show the cost of materials versus the labor involved, can save you a significant amount of money in sales tax. This is what I call the Plan B defense for co-mingled transactions. If you can't prove the breakdown at the time of the transaction, you might end up overpaying on taxes. The Texas Administrative Code allows you to go back and provide the comptroller with documentary evidence showing the actual taxable amount. But this requires that you have your books and records in order. Your invoices should clearly separate taxable and non-taxable components, and your records need to support that apportionment. The lesson here is simple. Make sure you're documenting your transactions properly. By clearly separating the costs of taxable materials and non-taxable labor, you can protect yourself from unnecessary tax assessments. This is especially important for roofers, as the cost of materials in your business can often be substantial. If you're ever unsure about how to handle your taxes or how to document your transactions, don't hesitate to reach out to us. At Texas Tax Group, we have extensive experience helping contractors like you navigate these complex issues. We're here to make sure you only pay what you owe, no more. And to help you get started, we're offering a free consultation. We'll review your records and provide you with guidance on how to protect your business from overpaying on sales tax. Don't wait until you're facing an audit. Contact us today to schedule your free consultation. Thank you for your time, and we look forward to helping you protect your roofing business.